We start the week off with stocks mixed. The S&P 500 up, the NASDAQ 100, our tech stocks down. We see 20-year bonds up and gold is down for the day. So let's go ahead and jump into these charts for Tuesday, the 6th of November, 2018. Let's see what went on Monday. Now, we had 4 prior weeks of really strong down movement. The S&P starts the week off a little bit up. And again, just the first day of the latest 2-day candle doesn't mean everything's changing, but it is interesting to pay attention to. We see the derivative oscillator has stopped its real strong downward movement. Price percent oscillators leveled off just a little bit. Again, this is the first day of the latest 2-day candle, but it's significant that it has started off with up movement. Again, up 0.57%. As we start the week, it's already pushed through the 2-day trend line and pushing through the weekly. Again, we don't call that weekly chart until the end of the week. But what we see on the 2-day candle is on the 2nd, that was Friday, things had pushed through the 2-day candle and moved even further up on our Heikin-Ashi candlesticks on the 2-day chart. Derivative oscillator losing lots of downward momentum. Price percent oscillator heading up, hasn't crossed over yet, but is heading up quite strongly. And we go to the 4-hour chart. What do we see there? Well, we see really a sideways slippage and slide. Derivative oscillator losing upward momentum. Price percent oscillator still heading up. Now remember, things are still poised, and we see this sideways movement since we go all the way back to Friday, actually Friday morning and afternoon. We see things as they are. Well, actually, that's Thursday afternoon. We see things topping out about the same point, somewhere around 273.50, sorry. So this sideways slide, we want to continue to watch and see what happens if things really peak out. The derivative oscillator showing a downward oscillation in that indicator. Price percent oscillator, which is our main indicator, of course, is still heading up. So just be ready to pull the trigger on a down play if things really cut over on Tuesday or Wednesday for down movement. You want to do a practice trade on another down move on the S&P 500. That's where we are there for the day starting the week. Now, QQQ was down for the day. Now, you don't see that in the first candle for the week. Again, these are Heikin-Ashi candlesticks. Please take our training at chartingwealth.com or the YouTube channel. You can find that same training there. We want you to take that. I think about 90, close to 100,000 people now have taken that. It's for free. In fact, I'll put it at the links at the end of the show notes. We push this a lot because we love the Heikin-Ashi candlesticks. What do they show? They show the week starting off with the average pace moving up. Now, again, it was down for the day. I understand that. Once you take the Heikin-Ashi training, you'll understand a little more about how Heikin-Ashi a lot more about how Heikin-Ashi candlesticks are calculated. We see the derivative oscillator gaining downward momentum. Price percent oscillator still heading down. Price movement sitting right there. It's above the 2-day and sitting right there on the weekly trend line. We go from the weekly chart to the 2-day. What do we see there? We see starting the week off again with some down movement on that 2-day chart. It had pushed through on Friday the 2-day trend line. Now again, we still are locked and cocked going down on the 2-day and the weekly charts. And we will continue to watch and see what we see. Derivative oscillators losing downward momentum, and that price percent oscillator, however, is still heading down. What does the 4-hour chart show us? Well, it shows us 2 days of down movement. Price is still above the 2-day. Derivative oscillator losing momentum. Price percent oscillator still heading up some. So get ready if we see things crossover going down on that 4-hour chart. That's to pull the trigger in a down play such as PSQ, which is the ProShares short. It moves in opposition to the Qs. In fact, it's a short of the Qs. Should be percent for percent, close to it. So if we do have a crossover going up on the 4-hour chart, you could do a practice trade jumping into the short of the Qs. Again, PSQ, Paul, Sierra, Quebec. Okay, now let's keep moving. We're going to go to 20-year bonds. What do we see going on there? Start off as we always do on our weekly chart. We can see that Heikin Ashi candlestick forming a strong down move for the day, even though, again, we see that it was up for the day, 0.38%. The Heikin Ashi candlestick is showing average pace down. We see the derivative oscillator losing downward momentum. Price percent oscillator, however, is heading down. We go from the weekly to the 2-day. What do we see there? Well, it crossed over going down on Friday. This is the first day of the latest 2-day candle. It's down also. And the derivative oscillators flipped over to negative. Price percent oscillator heading down. And we see that 4-hour chart. What do we see going on there? Now remember, 2-day still in a confirmed up move. Weekly is in a down move. And we're going to have to wait for these things to sort themselves out. Really a sideways slippage on that 4-hour chart. So we'll continue to keep our eye on things. And oh, you know what? I knew as I was saying that, it's the reason I came back, that did not make sense. It doesn't make sense because it's wrong. What actually happened is we had that crossover. We didn't change our chart. Now that makes more sense. 2-day and the weekly are both in confirmed down moves. I knew that wasn't sounding right. So what are we waiting for? We're waiting for the pullback on the 4-hour chart. We see that sideways slippage underway. Need to watch for our 4-hour chart to rotate back over going up before we can safely jump into a down play. So what you just saw me do, of course, this is what I love so much about the charts that we use, freestockcharts.com, TC2000. If you look in your show notes and your email, you will see a discount available, $25 off if you subscribe to TC2000. In the meantime, practice using freestockcharts.com. See if you don't like it. I have people write me all the time saying, hey, I can't find the derivative oscillator or the price percent oscillator on the charts that I use. And I'm like, well, stop using those charts. Use the easiest, best charts I think are out there. And those are freestockcharts.com and TC2000. So lastly, we will now go to gold. And we will go back to that weekly chart. What do we see going on with gold? Gold is starting the week off, actually down 0.23%, but it's forming a green open box candle. Derivative oscillators gaining upward momentum. Price percent oscillator still heading up, not as strongly as it had been the prior week. We go from the weekly to the 2-day. What do we see there? Of course, we see on that 2-day chart, ending on Friday, was an up candle. We see that the start of the day of the latest 2-day candle, bit of a down move, trying to move below that weekly trend line. Now remember, the weekly and the 2-day are still in confirmed up moves. So what are we waiting for? Well, we go to that 4-hour chart, and that's where we see we have just not had enough momentum since the 4-hour chart rotated over going down all the way back on Monday, the 22nd of October. It has tried its best to move over going up and then has just blasted away from it and just not enough momentum. So we're still waiting to see if that 4-hour chart is going to cross over going up, give us enough momentum for a jump-in move, which we haven't had. And again, is gold going to take off again? It took off, of course, back on the 11th, moving up quite strongly, and then started moving over down and just can't gain that momentum again. So we'll stand by and watch. And if the trade makes itself available to us, we shall jump in it. Folks, that's where we are as we end the day on Monday the 5th, go into Tuesday the 6th of November. We so appreciate you being with us. You have questions, problems, concerns, write us. Let us hear from you. cw@chartingwealth.com. Enjoy the trainings we have at the end of the video today. If you're joining us via audio on a podcast, then of course look in those show notes, the links to all the great stuff we have available for you, including the free PDFs on the daily market worksheet, weekly market worksheet, and the trade worksheet. Also that discount for freestockcharts.com's paid version, TC2000, which is what we use every day on the show. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.